What if I told you that one of the fastest growing economies of the 1990s collapsed, seemingly overnight, that Mexico's miracle economy, once praised by the entire world, turned into chaos in just a few days? This collapse didn't just destroy a currency. It changed global finance forever. This is the story of the Peso Crisis, a time when the dream of prosperity turned into a nightmare. But the real mystery is, was this collapse inevitable, or was it triggered by the very people who promised stability? In the 1980s, Mexico was drowning in debt, inflation, and economic failure. Then came President Carlos Salinas de Gortari, a Harvard-educated reformer. He promised to rebuild Mexico's economy through free market reform. He privatized state companies, opened Mexico to global trade, and anchored the peso to the US dollar. By 1993, inflation had dropped to single digits. Foreign investors poured in, the stock market was booming, and with the signing of NAFTA, the world believed Mexico had finally made it. Headlines called it the Mexican miracle. But beneath the surface, something dangerous was brewing. Mexico's growth was built on foreign money. To defend its strong peso, it needed a steady flow of US dollars. So it began issuing short-term, dollar-linked bonds, known as tesobonos. Foreign investors loved them. They paid high returns, with what seemed like very little risk. But the truth was, Mexico was borrowing in dollars while earning in pesos. If confidence broke, the entire system could collapse. And in 1994, that confidence shattered. The year 1994 began with optimism as NAFTA had just gone live. But in March, a tragedy changed everything. Presidential candidate Luis Donaldo Colosio was assassinated at a campaign rally. Just a few months later, another top official was murdered. Political shockwaves hit Mexico, and investors panicked. Money began leaving the country at an alarming rate. The central bank fought to defend the peso, burning through billions of dollars in reserves. By December, Mexico's new president, Ernesto Zedillo, made a desperate decision. He devalued the peso by 15%. It was meant to be temporary. But within hours, panic erupted. Investors fled. The peso free fell by over 50%. The stock market crashed, and Mexico was thrown into financial chaos. The peso crisis didn't stay in Mexico. It spread like wildfire. Investors across the globe began selling off assets in other emerging markets. What started as a local crisis became a global contagion. Now known as the Tequila effect, currencies collapsed, markets tumbled, and billions were lost. Mexico's economy shrank by more than 6%. Inflation skyrocketed to over 50%. Businesses shut down, and millions fell into poverty. The middle class, the symbol of Mexico's new modern identity, was wiped out. This wasn't just an economic crash. It was a national drama. By early 1995, Mexico was on the edge of total collapse. The U.S. government and the International Monetary Fund stepped in with a massive $50 billion bailout. But this wasn't to save the people. It was to save the financial system. The deal came with strict terms, budget cuts, austerity measures, and higher interest rates. The peso stabilized, but ordinary Mexicans paid the price. Unemployment soared, wages fell, and inequality deepened. Once again, it seemed the rich were rescued, while the poor were left behind. The Peso Crisis became both a warning and a template. Just 3 years later, Ada suffered a nearly identical collapse. Then Russia in 1998, followed by Argentina in 2001. Each crisis followed the same pattern. Overvalued currencies, massive foreign debt, a sudden loss of investor trust, and painful IMF bailouts. Mexico's fall was the first domino in a chain that reshaped the global economy. And if you look around today, you'll see that the same mistakes are back. In China, a property bubble is bursting. In Turkey, the lira is collapsing. In Argentina, inflation has soared past 120%. The details change, but the fundamental pattern remains the same. Nations build growth on borrowed confidence, and when that trust breaks, everything falls apart. By the late 1990s, Mexico had stabilized again. The peso was floating freely, inflation was under control, and growth returned. But slowly, The optimism of the Mexican miracle was gone. The dream of easy prosperity had been replaced by a painful realism. Globalization could lift economies, but it could also crush them overnight. So, what can we learn from this? First, a strong currency means nothing without strong fundamentals. Mexico's peso looked solid, but it was built on debt and illusion. Second, globalization amplifies everything. When things go well, the rewards are huge. When they go wrong, the pain spreads everywhere. And third, history doesn't repeat, but it certainly rhymes. From Mexico to Asia to Argentina, the same cycle of greed and collapse keeps returning. The Peso Crisis was more than Mexico's tragedy. It was a mirror, showing us all how fragile success can be. Today, as nations chase growth through debt and speculation, the same danger lurks just beneath the surface. Because once trust breaks, no bailout can truly fix it. The story of the Peso Crisis is a stark reminder. Economic miracles are never free. Behind every boom lies a hidden risk. Behind every promise of stability, there's a silent countdown to collapse. If we forget the lessons of Mexico's fall, we may be doomed to repeat them. Thanks for watching. If you found this story revealing, be sure to subscribe and follow for more deep dives into the events that shaped our world.